Today, we are going to compare Axis Small Cap Fund versus Canara Robeco Small Cap Fund. Please note that this video is made based on the recommendation by our viewers. Hi, I am Nilesh Bodhi and let us start the comparison between Axis Small Cap Fund and Canara Robeco Small Cap Fund. 0.46% is the expense ratio for Axis Small Cap Fund and 0.40 is the expense ratio for Canara Small Cap Fund. If you exit within 1 year, then you will have to pay an exit load of 1% in both of these funds. There is no lock-in period in these particular funds. If you see the benchmark followed by these particular funds, it is Nifty Small Cap 250 TRI. Anupam Tiwari is the manager for Axis Small Cap Fund. Sri Datta Bhandwaldar and Ajay Khandelwal are the managers for Canara Robeco Small Cap Fund. If you see the investment horizon, these funds are recommended for long term, means they are good for long term investments. Let us see the overview and returns of this fund now. The launch date for Axis is 29 November 2013, whereas Canara Robeco Small Cap Fund was launched on 25 Feb 2019. Now both belong to the equity small cap fund category. The minimum SIP in Axis Small Cap is 500, whereas the minimum SIP in Canara Robeco is 1000 rupees. The minimum lump sum in both the funds is 5000 rupees. If you see the 1 year return, then 18.33% is the return given by Axis Small Cap, whereas 28.82% is the return given by Canara Robeco Small Cap Fund. If you see the 3 year span, then 27.37% is the return given by Axis Small Cap and 31.65% is the return given by Canara Robeco Small Cap Fund. If you see the 5 year span, Axis has given 20.53%. We don't have the returns of 5 years because Canara Robeco is still a new fund and it is yet to complete its 5 year span. If you see the inception returns, since it has been inception, then Axis is giving 24.36%, whereas Canara Robeco fund is giving 30.40%. Okay, let us now see the sectors in which it is investing. So when it comes to Axis, the top 3 sectors are chemicals, in which it is investing 16.04%, 10.63% in technology, 8.64% in construction, whereas 17.59% is invested in financial sector, 15.59% in services and 14% in materials by Canara Robeco Small Cap Fund. Now if you see the PE ratio, 32.45 is the PE ratio for Axis and for Canara it is 26.49. If you see the PB ratio, 4.62 is the ratio for Axis and 3.37 is the ratio for Canara Robeco Small Cap Fund. If you see the equity percentage, 79.81% is invested in equity by Axis and 92.28% by Canara Robeco Small Cap Fund. If you see the cash percent, 0.1% is the cash percent with Axis, whereas 7.7% with Canara Robeco Small Cap Fund. So let us see a few parameters now. The first is standard deviation. So what is standard deviation? It gives an idea about how volatile fund returns has been in the past 3 years. Lower value indicates more predictable behavior. Higher the standard deviation, higher is the volatility of the fund. So as we can see, Axis is low volatile when it compares with Canara Robeco Small Cap Fund, right? Beta. So what is beta? Beta gives an idea about how volatile fund performance has been compared to similar funds in the market. Lower beta implies the fund gives more predictable performance compared to similar funds in the market. Remember, there is one thing about beta. It is everything related to 1. Means if it is more than 1, less than 1 and equal to 1. So these are the 3 criteria. Okay, so let us see. A beta greater than 1 indicates a stock price is more volatile than the overall market. That's the first. A beta less than 1 indicates that the stock price is less volatile than the overall market. And the third, a beta of 1 indicates that the stock moves exactly identical to the overall market. Now if you can see over here, Axis is less volatile. Canara, when compared with Axis, we see it is high volatile. But if you see the benchmark of 1, it is less than that. So yes, it is in the range then. Now let us see what is Sharpe ratio. Okay, Sharpe ratio indicates how much risk was taken to generate the returns. Higher the value means fund has been able to give better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. And as we can see, both of these fund has got very good Sharpe ratio because they have been taken very good risk and generating returns for the customers. Now if you see the parameter alpha, alpha indicates how the fund has generated additional returns compared to the benchmark. Means these funds both which is Axis and Canara, they have been generating additional returns compared to the benchmark as well. So in terms of alpha, they both are the best funds. So let us now see their comparison with the benchmark. So if we can see the benchmark for Axis, we can see that first it was dominating, but then over a period of time it is not. I mean, it went down, maybe due to Corona. It has, if you see the Corona period, it is little bit down, but now again it is coming up. But when you compare it with the Canara Robeco small cap fund, we can see that it has always been beating the benchmark since its inception. So when it compares to the beating of the benchmark, Canara Robeco is definitely good when we compare with Axis. Now, when we see the downside protection for Canara Robeco small cap fund, we can see where the market is falling, mean going much more negative, it is still not that much negative. For example, in the 3-month period, 6-month period and YTD, we can see where the market is falling by 2.10, 7.23 and 9.11. It is falling by 0.53, 0.5 and 3.53. Whereas if you go for the longer periods, it is generating very good returns. In the case of Axis small cap as well, we can see that in the period of 3, 6 and YTD, where the market is falling 2.10, 7.23 and 9.1, it is falling only 2.12, 5.49 and 8.01%. Whereas in the longer period, that is 1 to 3 years, it is giving very good returns, right? So both the funds are good in terms of long-term investment. Now, why is it so? When being a small cap fund also, it is able to generate very good returns. So if you see the Axis small cap fund, there are 65 stocks in this particular portfolio, and they are investing 0.36% in large cap, 3.73% in mid cap, 60.59% in small cap. I mean, being a small cap fund also, they are investing in both large cap and mid cap. That is the good advantage. The AUM of Axis small cap is 9,052 crores. So the funds with higher AUM tend to have lower returns in the future. That's what has been observed by the market. Now, if you see the Canara Robeco small cap fund, 61 number is the stock basically in Canara Robeco small cap fund. They are investing 1.9% in large cap. They are investing 11.34% in mid cap. What does this tell us? This tells us that when the market falls, this fund is not going to fall much because they are creating stability by adding large and small cap, and the percent is also more when it compares with the Axis small cap fund. So they are investing only 59.19% small cap and rest is in large and small cap, large and mid cap, sorry. Yeah. So if you see the AUM, that is 2,114.25 crores. So the AUM is pretty less when it is compared with Axis, and hence there is more growth potential. This video is made for educational purpose. Remember, mutual fund investment are subject to market risk. Past success does not guarantee future performance. For getting your free mutual fund portfolio, please fill in your data by clicking on the link given in the description. I am SEBI certified mutual fund distributor, and you can now buy any mutual funds online via AssetPlus. Please open your free lifetime account for investment in mutual fund and fixed deposit using AssetPlus link given in the description. If you love the content by us, please subscribe to our YouTube channel and don't forget to hit the bell button next to subscribe button. That's all in this section. See you in the next video. Till then, take care.